So my last post talked about what happens when the rate cuts and how it affects your likely repayments and your likely borrowing capacity. I wanted to quickly follow up and mention when this happens. So when the RBA announces a cut, the banks then decide whether or not they're going to pass that cut on to their existing clients and to new clients. Now, good news is it looks like most banks are passing it on to both their existing clients who already have mortgages with them, as well as any new clients that are coming on board, so they're new to bank rates. Now, that does differ bank to bank. So, for example, Macquarie's passing this on from the 23rd. A lot of the majors like NAB, ANZ, and CBA are passing it on May 30th, and Westpac and the Westpac Group are passing it on June 3rd. So a slight difference between banks. It's not a huge difference, but obviously the sooner they pass that cut on, the sooner you start saving that money. So it's an advantage to be with a bank that is passing it on sooner rather than later. The second thing to know is that some banks will automatically adjust your repayments, which I touched on last time. However, some banks will not. What that basically means is they're not adjusting your repayments, then you will continue to make your old scheduled repayment until they do adjust this, which does mean you're paying down your loan faster, but you're also paying down more than you need to. So I've actually broken it down on the blog on my website if you want to see when your bank's passing it on and what that means for you. Otherwise, feel free to shoot me a message. Cheers.